Everybody to the Chinchilla Pickin' Podcast. It is May the 19th, 2024 at 5:17 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only Brandon of Bonds, Brandon Beaver. Brandon, how are you?
Man, I'm good. I'm sore. Long weekend of work. But hey, Mavs going to the Western Conference Finals. It's great to see a Dallas team win.
Right? There
Second
you go,
Western
man.
Conference Finals for them in 3 years. Yeah, they won by one last night. If you watch that game, that was an incredible game. It was incredible.
I did not watch the game. Sorry, I was
Yeah,
watching the World Heavyweight Boxing Championship title unification fight like every other red-blooded American. Sorry.
boxing. All right, we're
Yes.
now we are now covering two niche sports for sure here. I mean, I talk about wrestling a lot. Now you're talking about boxing, which nobody watches anymore.
Oh, boo.
I'm talking about the NBA, which nobody, at least here in Cincinnati, watches other than me and my girlfriend.
Right.
Bigger NBA fan than I am, actually. But look, they had spent the entire game up into the fourth quarter. They had only had a lead for like 30 seconds. They were getting beat the entire game until like the last 2 minutes, and then went up, took the lead, lost lead, took it again with like 2 seconds left, and one by one. It was a fun game. So
Nice. Good to hear, man. Good to hear. I tell you what, though.
Who won your punching contest?
Usyk beat Tyson Fury. Alexander Usyk beat Tyson Fury, and he unified all the heavyweight belts under one person for the first time in 25 years. Not since the last person to do it was also Ukrainian, and it was Vitaly Klitschko. So Alexander Usyk, the next one to do it 25 years later.
Nice.
So, or 20 years later, something like that. It's been a while. Let's put it that way. So finally, all the heavyweight championship belts are under one person.
Awesome.
So undisputed heavyweight champion of the world.
So we're trying something new today. We are recording and editing with Anchor's or Spotify's program Riverside, and I'm getting a little bit of white noise on Dave's end. This is something new we're trying. So if you get that white noise in the podcast here and I'm unable to get it out during post-production, I apologize. But this is a new process for us, a new editing program here and recording program, and we'll get it worked out eventually. But I just wanted to talk about that for a second. But let's go into the show. I don't know. Do you want to do the rules? Did you do the rules yet? I don't even know if you did those yet.
I have not, but I had more fluff talk about stocks and investments. But sure, I mean, I was gonna get into the past week, and there was a lot of earnings. There was the inflation numbers that came out, and then there's the roller coaster ride of Roaring Kitty's Reddit stocks and all that noise that happened this past week. So, I mean, we got to mention it. I feel like.
Do we?
Let's get into the show first, and we can mention it later. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You're live back and forth, the bicker and the banter, right here on the show for you. Brandon, yes, eventually we do need to talk about this past week. We don't have to get into it right now.
I don't know. What kind of world do we live in, Dave, when so many retailer traders and individual, I don't even want to call them investors, but I'm not putting down everybody that jumped into this that knows this is a casino, which I'm assuming is most of the people that did it, right? If you want to go to the casino, you got the money to do it, fine, more power to you. I'm cool with it. Actually, I probably would have done it if I would have been sitting at home. But, there's that 5 to 10% of GameStop people who call themselves investors that think that this is a great idea. And look, you're following somebody with the name, he's Reddit, right? He's on Reddit, right? So he's one of those.
He's on YouTube, he's on Reddit, he's on a number of places. Yeah, Twitter.
And his name's Roaring Kitty.
Yes.
That's all you need to know.
Well, all right. So before you start bashing in this guy, I think you need to check out the movie Dumb Money. Give it a watch. I think you can stream it on Netflix. It has a little bit more of the background. But I do like there was one person in the movie who did lose a lot of their money, and they don't have it to lose. But it's based off true events of the whole GameStop craze from a couple years ago.
I feel no sorrow for the person. I really don't. I really, it's one thing if you are like an elderly person and you fall victim to a phone scam. It's totally different if you are of right mind, 20 years old and you lose money on GameStop.
So, what
Or
about someone who's not financially literate and they're following what they believe to be? Because Roaring Kitty did work at a bank, was in finance, and they're following someone who they believe has experience and knowledge, and they're following the lead.
yeah, no sorrow.
Really,
Yeah,
I,
you've
I,
got
I
more sense than that. Even if you're not financially literate and you don't know anything about stocks, maybe you should learn those things before you throw money down the drain.
so I encourage you to watch a movie because the person in the movie who lost all their money went all the way up to like 500,000, and then they went all the way to where they went back to where they started from. Was a single mother of two in the movie who doesn't know much about investing. It's on true story,
Yeah.
true events. Doesn't know
Well,
much about investing, but was trusting Roaring Kitty's advice.
with
There's a
money
lot of
that
other
she
people.
needs, with
Yeah,
money that she needs for her two kids.
yeah.
It's even
There's
worse.
a lot of stories like that. Is my point. I like that there's podcasts out there like ours that actually try to educate and lift up people and help people get to that next level without gambling.
Yeah, no sorrow. I
Wow,
can't.
that's heartless.
I
That's
can't. I
heartless.
mean, I
All
don't
right.
even want to watch it. Like, if she's in a bad position, that's even worse, right? Like, you made that decision. I know you're not financially literate and you're putting your trust in somebody you don't know, which is ridiculous to me in the first place. I
I
mean,
mean,
I'm
that's
an
what
actual
everybody does, though, right?
no. Who?
401ks. You go to your bank, you trust your guy. You don't really know them. What makes Joe from the bank different from someone online if they're all in the same industry, finances?
Because Jim from the bank is at a reputable bank that you've hopefully done a little bit of research on, that you may know and you may trust the actual bank because the bank has a track record, and Jim, your bank teller, can't spend your money.
I don't know, man. I don't
And
know. I
same thing
can
with
make
the
the argument
401.
either way.
There's plenty of time. There's plenty of ways that you can research the company 401k. There's company matches that you can trust, right? And I
Yeah,
recommend anybody with a company match to match the company match, to hit that percentage and get that free money, because that's what it is. But you could still look up the 401k manager. If you've got Fidelity, you can figure out how well Fidelity's funds do before you put your money into it.
yeah, and I've done that. I do that. I recommend I teach people how to do that. So it is something that I do. Yes.
Okay. So a single mother with two kids trusted a guy named Roaring Kitty, who's not a part of PNC, who's not in a reputable company, and his
I just
name
say
is
that's a little
Roaring
harsh.
Kitty. His name is Roaring Kitty.
All right. Well, anyways, yes, GameStop had a big rise and fall, and it was a smaller amount of people involved this time from retail side. The amount of Robinhood accounts and other accounts on the retail side was significantly smaller, but yet they still drove the price up, and I think that had to do with the bigger banks getting involved and trying to make some quick money off of it when they saw the opportunity.
Yeah, you want to throw $50 into it, then what? There's no pain in that, right? But then I've had so many conversations with people that are like, "Oh, I just believe in the fundamentals of this company," and I'm like, "What are you looking at?"
Of what company? GameStop? Because that's
Yeah,
ridiculous. No, no,
yeah,
there's no fundamentals of GameStop. It's not you can't make a case there at all.
no,
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 sorry.
it's
You can make a case that you're going to make some quick money off of it from going up, and you're playing the options, and you're trying to make some quick money. Sure, I'll let
this
you
would have
argue
been
that,
like this would have been like 2009, and somebody saying, "Hey, you know what I think we should do? Let's put our money in Blockbuster."
right? So yeah, the stock twits is going off on GameStop, talking about this and that and the other, and all these short positions that eventually the companies have to buy into. So eventually they do have to have a nice little dead cat bounce, as we call it.
Yeah. Yeah. So
But that's just
I don't
people
know.
covering out their shorts, closing out the shorts.
We haven't even talked about what we're going to get into yet. But do you want me to go first? Because I got stuff
Well,
about video games here.
oh,
But go
did
ahead.
you?
Yeah,
Did
yeah. Is there something else you wanted to talk about?
I mean, yeah, sort of. I mean, let's go about video games, and we can get to the other topics in a second. But I do want to mention one thing because I posted this in our group chat this past week, and it was about a TikTok. I was scrolling through TikTok because Brandon and I have a TikTok for chinchilla picking, and every now and then when I get on there, I kind of scroll through, and I was watching a video from this gentleman, and he's got 20,000 followers on TikTok, and I was like, oh, must be pretty smart then, right? He's got a chart in the background. He's sitting there talking with the chart just ticking away. And then someone was asking him questions. It was about pattern day trader. And he says, and I'm going to summarize, I'm not going to quote, but it was to the point of like, I don't quite understand what the rules are for pattern day trading or what can cause that. I just feel like, if you feel it's a good trade, we need to go ahead and make the moves. And I'm just sitting there listening to this guy say this stuff, and I couldn't believe it. He's got 20,000 followers on TikTok, and he can't even give a definition of a pattern day trader or describe how it works. Versus you have Brandon and I here who can describe in detail and define almost every single terminology that the stock market uses and give you probably a history breakdown. Brandon could probably break it down by like, well, this was started back in 1845 by, so and so. And we got like, what, 80 followers? And it blows my mind. We actually have the knowledge and the skill set. But yet these people who can make cool videos got the 20,000 followers.
Yeah. Yeah. Well, here's the thing, though. I've said this before, and I said this in our group chat last week. If we were to go on Google, find some stock pictures of Ferraris and pretend that those are our cars and tell everybody on this podcast, if we were to tell our audience that we had ways to make them millions of dollars overnight, we would probably have 1,000 followers, pretty quickly. Now our show wouldn't last long.
Right.
By this time next year, the year after, eventually we'd be gone. We'd be a flash in the pan because people would start to call us out on our BS. But we could get there. And these people come and they go all the time.
Oh, yeah.
All the time. These people on TikTok that are doing this, or even stock twits that are, and they'll come out and they'll have people, they'll convince people to buy, their advice and say, for a subscription, you can join my Discord. And then you find out a year later, 2 years later, they don't exist anymore.
Right.
And there's a reason for that. And there's a reason why we've done almost 160 shows here over the course of close to 3 years. And there's no end in sight for us because we've made mistakes in the past, but we've been honest about our mistakes. And we tell people, hey, this is something that takes time. You make money, get rich over time. It's not something that you're going to do in the next week. You're not going to wake up in 3 months with $1 million in your account and be able to buy a huge house and a bunch of Ferraris.
Exactly. And that's what people need to understand. Yeah, I see there's a whole like multi-level marketing thing now too, Brandon, out there. And I've seen on social media where they meet in each other's houses and they pump each other up, and they're selling this program of this what they call AI stock picking, and AI is doing the work for them. And it's just multi-level marketing for stock picks.
Unbelievable.
And it's out there and it's a thing. And I'm just blown away from it. But like, hey, sure. Do
now
your thing.
that's the kind of thing that I might feel bad about, 18, 19-year-old kid getting mixed up in that without the life experiences to be able to recognize the red flags before they come up. But, following somebody on Reddit that's named Roaring Kitty.
And it is mainly 18 to 24 that are joining these things. They're looking for a way to not have to do the 40 years of working in order to retire. And I get that. And with your or my knowledge, we could probably get them retired before then.
Yeah.
Because if I knew now what I knew back when I was like 20, man.
Yeah, for sure.
Yeah, like forget about it.
Yeah, man, if I knew when I was 20 what I know now, I'd be retiring in like I might even be retired by now.
I would
I would say by 40.
I would be long since just doing, whatever.
Yeah.
But yeah, it is what it is, man. We are
Yeah.
here.
Yep.
And now you can go ahead into your topics about video games. I want to hear about this.
But you know what? Here's the thing, though. Let me just like expand upon this a little bit, though. Even for the
Okay.
20-year-olds listening to this, the tricky thing about it is it doesn't take long to learn something, but it takes years sometimes to really know it and to practice it. And the stock market is very much psychological. I would say it's 80% psychological, 20% numbers. You have to have both to be right. You do. But 80% of it's psychological. And you can know that you should not be emotionally attached to what you're doing in the stock market. But it takes you years to really, well, you can learn that, but it takes you years to really know it
Right.
and to put it in practice and to be able to have that kind of discipline to, to actually follow what you're setting into place and to not doubt yourself.
Right.
All right. Take Two. That's what I wanted to talk about. Take Two Interactive. They reported
It's
earnings.
because of Red Dead. All right, let's go. Take
No,
two.
not Red Dead.
No, it's not
Grand
Red
Theft
Dead. All
Auto.
right, what is it?
No, this is Grand Theft Auto 6 that we're going to talk about.
Oh, okay.
The new Grand
That's
Theft
the
Auto
other
6
one they own. All right.
launching in the fall of 2020. Well, they got a lot of sports too. They've got NBA 2K, WWE 2K. They've also got Borderlands and a few others as well. So, but I mean, Grand Theft Auto and Red Dead are the two big ones, right? Grand Theft Auto 5 has now surpassed life to date, so from beginning to now, sales of 200 million units. That reflects 20 million units of Grand Theft Auto sold in the last fiscal year. This game's been around for 10 years. 10 years, and it's still selling 20 million last year. So that's
Man.
considered like a blockbuster. If a game was to launch and to sell 20 million units in the first year of launch, that's a blockbuster. It's in its 10th year of life here. That's crazy. Take-Two did say in its fiscal fourth quarter earnings call, Grand Theft Auto Online, this is the multiplayer version of the game, it grew its audience by 23%. And all the microtransactions and stuff like that, that's important for them. 23% in the 10th year is crazy. Grand Theft Auto 6 is now going to launch in the fall of 2025. We were expecting it this year, a couple of years ago, and then it got pushed, which is fine. I don't know anybody that knows this. The Rockstar people, when Take-Two Interactive bought them, the Rockstar people stayed the same. And they're very much into the video games that they create, and they are not corporate people at all. So they will sit in, I don't know if it's an office or if it's an apartment at this point, but I think it's in England. Take-Two Interactive does not tell them what to do, when to do it, because they don't listen. So they're going to perfect this game and get it out when they get it out, and it's not going to hurt the bottom line. It's just not. They said, so fall of 2025, that's the launch of Grand Theft Auto 6. That's going to be the 2026 fiscal year. What perked a lot of people's ears up is that they're expecting to still grow year over year their bookings. They said they're going to grow their bookings year over year sequentially in the 2027 fiscal year. So they're going to have a huge bump. I think it was $8 billion or something like that Grand Theft Auto 5 brought in. So it's going to be, a big deal when that comes out. So to grow bookings sequentially year over year, the year after, that is what people are talking about. And it's one of the reasons why I think the stock was up, like 2 or 3% after the quarter. Because they're like, holy crap, well, what are you going to do in 2027 that's going to surpass your 2026 year when Grand Theft Auto 6 comes out? So they're looking at, I don't know if it's going to be a new franchise, but it's going to take a lot to still grow year over year from that point. Analyst James Heaney of Jefferies said Take-Two's fiscal 2027 will need incremental titles such as Borderlands or BioShock or both to be able to continue the trajectory of growth going forward. Grand Theft Auto, by the way, this is just sold insanely. If you haven't figured that out by what I've said already, the sales have been crazy. They got rolling with the first release of Grand Theft Auto 5 of Grand Theft Auto 1 in 1997. Since then, it's sold more than 405 million copies. Analysts are now estimating that microtransactions alone for Grand Theft Auto Online that's GTA 5 generated nearly $500 million in the most recent fiscal year. Not total, just last year. 10 years after launching $500 million in the microtransactions. I'm not really, it may sound like I'm telling people to buy this right now. I'm neither here nor there on it. They still haven't figured out a way to have 4 straight consecutive quarters of profit. So
in the video game industry, that's hard to do since a lot of your games are cyclical, and you had those ups and downs. What you hope for is like your up quarter where you just came out with a new release, or you have some new updated version. It would provide enough profit to cover you for the next 2. When you do the research development and some research, but development of the next games and the next cycle that's going to come out. It's very much cyclical in the gaming industry due to that effect.
Yeah, and that's why I think a lot of these game development companies have leaned a lot on mobile for the microtransactions that brings them, and that's sort of a stable way of bringing in money. And they also have, Take-Two's got the NBA 2K game franchise and the WWE 2K franchise that they can rely on for money every year. And Ubisoft's got 1,000 what's that, Assassin's Creed? How many of those do they have out? I think they've
got another one coming out here soon too.
Yeah, and Call of Duty for Activision Blizzard is like they found something that brings them revenue pretty consistently on a regular basis, and they just keep releasing it and releasing it and releasing it over and over and over again until we're all very tired of it. But GTA, it's taken 10 years for Grand Theft Auto 6 to come along. Looks like it's going to be 11 years. I guess what's one more year on it. The game's going to be just an absolute blockbuster, probably sell more than any other video game of all time. It'll probably be the biggest launch of all time.
And that's a lot to say since when Red Dead last had theirs come out, it was 500 million in that first week.
Yeah.
That was ridiculous.
I would say, look, I mean, if Xbox can buy Activision, if Microsoft can buy Activision, why can't Sony go after Take-Two?
Sony already bought, who'd they buy? They bought somebody recently.
Yeah, I don't know. I didn't know that they did, but I'm looking at Take-Two Interactive. The Rockstar guys were Sony specific at the very beginning. So they've got a long-term relationship with Sony. I'd be looking at buying Take-Two Interactive if you can get it for a decent price. I think it'd be a very good addition to Sony and bring it back to the PlayStation specifically. That'd be a huge...
Or for Microsoft to buy up too. So,
yeah.
Either
well, that's what so that's what I've got on Take-Two and video games. I don't. You got any more thoughts on that, or you want to move on? I've got another topic here we can talk about. We can go over anything before the show started.
We didn't. We're just kind of like doing this show just like off our cuff here. But as far as video game industry, it's a hard industry because there's a shift. There's a lot of PC players nowadays, more compared to console players versus in years past. I remember the consoles were the biggest thing out there in the 2000s. And you could even make an argument for maybe the 2010s. But then esports really took over, and there's this whole esports movement, and there's esport teams in high schools and colleges, and it's billions of dollars industry. You have esport professional teams, and these are all PC games.
Yeah.
And so these PCs has really taken over, especially with the Twitch streamers such as Ninja and a few other ones that they stream and they do it through their PC. They don't do it through a console. And so you have that, and you have this rise of PC players versus console players. It's in the past it was more console than PC. Now it seems like it's switching back to PC. So
yeah,
and it's not Apple laptops and computers. It's PC because those are the gaming ones that you can make and create better.
Yeah, you
So
can't really game on an Apple laptop. I know that, and I'm not even a PC gamer.
So as far as like where I see growth, if you want to try to invest in something, invest in some of the esports companies out there. There's a number of them you can invest in. I don't know them off the top of my head. Those are not ticker symbols I have memorized as of yet, but I know there are a few of them. I would do your research, check out the companies that are consistently profitable, have a good plan. I would also look for operating profit and EBITDA.
Yeah,
So
for sure. For sure. So I want to move on to the next topic here because this is one that's really been kind of like messing with me for the past week. I bought Disney, and I'm a little bit on this point right now. Like, I'm not emotionally attached to the stock, right? But just practically a little bit like still half and half on what I want to do here. And I'm thinking I'm going to wait until September to figure this out. I'm not somebody that's known for rash decisions in the stock market. I take my time before I make a decision. Sometimes that hurts me, sometimes it helps me. I like to wait for things to come out and play out. And then sometimes they play out and people sell the stock and it didn't work out the way I wanted it to. But other times it works out and, there's a nice 20, 30% boom, just off, a 1 day news event or something like that. So we'll see what happens here. But Disney, I really like my thought process when I bought into Disney because the price earnings ratio was so high on it. But if you were looking at the stock and the earnings and stuff like that, when I bought it, this was post COVID. Earnings for the parks hadn't returned to normal yet. They still really haven't. And that's bothering me. We had a post COVID boom, but that happened here in the United States when China was still shut down. Shanghai and Hong Kong are now open. They've been open for close to a year now, and I'm not seeing us return back to what I thought we were going to return to. And essentially what that should have done, drive earnings up and lower that price to earnings ratio back down to about 15 to 20. We're way higher than that now because earnings came in at a loss for Disney this quarter. Thanks to a one-time charge-off for a network that they own in India that they bought for cricket, for the sport cricket, right? Which is huge in other countries. Not very big here in the United States, so you can laugh at it all you want, but it's big over in India, and it was a big
hey, we
deal.
got a lot of international listeners, buddy.
Okay, well, yeah, we do. That's true. But the fact of the matter is, it's a big deal in India. But also, the fact of the matter is like, hey, you're going to miss expectations that much and swing to a loss. How did investors not know about this beforehand? How did you not know about this beforehand? How did you not factor this into your earnings expectations so that you can warn investors that this was going to happen? That makes no sense to me. Did you not know that you were going to get this charge when you got this charge? I don't get it. But anyways, here's the thing. I was 75% sell when I heard this because of course what's happening is price earnings ratio is going in the opposite direction. Valuations now look even more expensive than they did a month ago, and I don't like that. Even though the stock dropped 9-10% after earnings and we had like one of the last worst days in Disney stock history. I'm still up 8% on it. So now I'm thinking like, do I take the W and take the sell on this or no? And what I think I'm going to do is I'm going to wait until September and we'll see how this plays out. And the reason why I'm thinking that, a year ago, the streaming unit for Disney lost $659 million in the same quarter, in just one quarter last year. This year, still a loss, but down to $18 million. Significant improvement. So now we're looking forward to the next quarter, and it looks like we may have a profitable streaming unit by next quarter, which is, I was thinking, next year. Kind of two sides to the same coin here. And now I'm thinking, well, maybe I'll wait till September. Let's see if the streaming unit is profitable because that's going to be a nice surprise to the upside if it is, and investors should react accordingly. I still have a little bit more concerns, not just the parks, which seem to have lost their magic, but also this new package that Disney is offering with Warner Brothers and Fox Sports. Warner Brothers just lost their NBA TV rights to TNT, or not to TNT, but to NBC. TNT Sports is not going to bring the NBA to this new sports app that they're bringing out. ESPN will still maintain their contract with the NBA, but without the NBA, what is Warner Brothers bringing to the table here for this new You know,
Warner
I
Warner Brothers is you get that through the HBO Max channel. They have a lot of hockey. They have the college basketball. They do have boxing still. There's a number of other sports that they carry, and there are some other things there. But you're right on the sports. Disney was a good move in that regard because sports fans usually will stay trying to watch their sports teams.
right.
That's hard to lose those fans. You really have to mess up to lose them. It's a good move by Disney. But I thought the parks were doing well. I thought all the news was there was lots of traffic. Is it just the profit they're
There's
making
been
off
a
of it?
lot of traffics, but the profit's not been there. And they've been taking the profits from the parks and then moving it over into streaming and losing money on it. So, and Bob Iger, thankfully, is slowing that down. He's slowing that down. So
Gotcha.
I'm happy about that. And I do want to say this too: Warner Brothers still has a chance to match NBC Universal's offer or to counter it and come higher. It doesn't look like they're going to do it, but they might. Now, NBA seems to be leaning, according to sources that I've read online, so take that with a grain of salt if you want. The NBA seems to be leaning towards NBC, and the reason is that NBC said, "Hey, if you come to us, not only will we double, or I think they're about doubling what TNT was giving the NBA to begin with. So NBC is going to double the amount, but also they're going to do 3 primetime games every week rather than TNT Sports 2, what they were doing. So more airtime, more money, win-win for the NBA. From what I was reading on CNBC and Wall Street, Warner Brothers has the legal right to match the offer. But
Ooh,
whether or not the NBA has to stay with Warner Brothers is unclear. So we're in unclear territory here. If the NBA can say, I don't care that you matched it, I'm going to go with NBC instead, we don't know. We don't know yet. So we'll see how that plays out. But
what's the
for right
difference in price? How much?
so I think, oh, I knew you were going to ask me. I'm going off memory here. I think the NBC deal is $2.5 billion. And if I'm way off, I'm sorry. Look it up. You're going to have to Google that one because I don't have that in front of me. But in my opinion, if they're going to do this, I think Disney, Fox Sports, and Warner Brothers needs to get together, put some of their money together, and beat NBC's offer and come up with a new
Gotcha.
deal. But
Gotcha.
right now, it looks like Warner Brothers is probably going to lose it. So, I mean, that's not good for a new app that's going to come out for streaming that they're looking to charge $30 to $40 a month for.
Wow.
Yeah. And that was another concern. The price point of this is wildly high.
For NBC?
No, this is going to be the Disney Sports app with Disney, Fox or Fox Sports, and
And ESPN
Warner
and all
Brothers.
that?
Yeah, well, yeah, because Disney owns ESPN. But yeah. So the price point was a huge concern for me too. You're paying like, double what you pay for Netflix. I don't see a lot of people signing up for this. I just don't.
People might sign up for a season and then dump it. 3 months of the season, they pay $90. They see all the games they want to watch, and then they dump it.
Yeah. So I guess, but then really what they should be aiming for, if they're going to lose the NBA, let's aim for the NFL because that's more popular in the United States anyways. It'll bring more money. I would leave Major League Baseball out of it because the MLB is like way too regional until October comes, until October, the late part of the playoffs for the Major League Baseball. I watch the Cincinnati Reds. I'm not watching the Dodgers because I don't care about them.
Right.
In the NFL, you might watch the Bengals here in Cincinnati, but then also care about the Cowboys like I do. I'm a huge fan of the Cowboys. That's my opinion, though. But this new app is concerning me. But I was happy about the decreased losses in the streaming segment. That was big news to me, and that's why I'm probably going to hold it till September.
Yeah, you were up by a lot. I think their high was what, 122, 124, somewhere around
Yeah,
there.
something like that. It was a nice run there for a little bit. Now it's only 8%. Whatever though. It's just the way my portfolio is working right now. When one stock goes down, another one goes up, and so I've been sitting at my all-time highs for about 4 months now on my,
Yeah.
on my portfolio, and it'll go down and go up, and then go up and go down. It's just whatever. It's just how it's been working out. Sometimes that happens. Warner Brothers and Disney, though, they can't really lose their partnership, even if Disney does say "see you later" to TNT on the sports network. They've been benefiting here because Disney and Warner Brothers, they're teaming up, and you just mentioned Max, and they're bundling. They're bundling the Hulu with the Max, and that's been actually increasing subscribers for Disney's Hulu. So it's been a decent partnership up until this point. Now there's a new bundle with Warner Brothers and Max that's coming, and we don't know. Apparently there's going to be an ad-free version of it. So pricing's not available yet, but we're going to find out this summer about the ad-free version of it. Yeah, so just talking about like the whole India, the one-time charge. When Disney bought Star in India, that included including networks, the Hotstar streaming service. The company took a roughly $2 billion charge in this quarter related to that deal. And here's the thing, when you're talking about the cricket that Hotstar offers, they lost a lot of the contracts they had in cricket anyways. So this was Bob Iger's predecessor, not a very, good investor, and that's why he doesn't exist at Disney anymore.
So one of the main reasons why they went to buy Star was because of the cricket, and they lost those contracts.
Yeah, they lost most of them, yeah.
Man.
And now it's estimated, by the way, that acquisition's now worth about $2 billion less than what it was when they first bought it.
Okay.
Yeah, they lost money on it. Now, last month, Disney did, Bob Iger did triumph over Nelson Peltz. He was looking for a board seat. He pushed for budget cuts and other measures. And Blackwell's Capital was also doing the same thing. Bob Iger got his guys to win that. That led to corporate expenses jumping by more than $112 million for the last quarter. They jumped up to $391 million. They said that was a result of costs related to the proxy battle and one of the most expensive shareholder fights ever. Thanks, Nelson Peltz, but you really didn't do us any favors in this case. There's another reason why we swung to a loss in the last quarter.
There you go.
Number of domestic Disney Plus subscribers rose to 54 million, up from $46.1 million at the end of 46.1 million people at the end of December. Overall, global subscribers to Disney Plus, including the Hotstar service in India, increased 153.6 million people in the last quarters. This was actually one of those.
I got to see those. I want to challenge those numbers because I think there was Hulu subscribers, there was Star subscribers, there was ESPN Plus subscribers, and then when they throw in all these bundles and they say, hey, we're not going to charge you anymore, we're just going to bundle this up, and they're saying, hey, look, we got more subscribers, but you really just gave away your product for free. Did you really get more subscribers, or are you just fudging numbers here?
That's a good point. Now, I do want to say this, another bright spot for the streaming service. If you excluded sports altogether, streaming would have earned a profit of $47 million. So there's that. Once again, this is one of those earnings reports to me that was different than expected. You expected the parks to be hot. They weren't. But then streaming was a little bit better than you thought it was going to be.
Gotcha. Cool. What else you got, man, besides Disney? You're holding Disney till the fall.
That's all I got. I'm looking to the September quarter. I want to see how this plays out. I'm not happy with how this quarter just ended. A reason for buying it was that price to earnings coming down because of earnings going up, and it was supposed to look cheaper now at a higher price than what it did a year ago. Now it looks more expensive at a lower price, and I don't like that.
Gotcha. All right, man. Couple things here. I love it when CNBC copies our show. Every single time I report about something from my news wires and everywhere I look, CNBC has the same article just 3 weeks later. They just need to reach out to me and I'll tell them what to write. But headline on their, if you go on the CNBC app right now or on the website, the first headline you see, top of the page is soaring debt and deficits causing worry about threats to the economy and markets. If if you remember a few weeks ago, I reported on this. There was meetings and all the World Economic Forum and all these chiefs of other countries and everything was coming on saying the U.S. economy. They questioned it. They questioned the stability of it. They say our economy is not solid because of spending. They said we need to have deficits, make some cuts. We need to make some cuts, not have deficits. We need not have deficits. And so it was a lot of criticism out there. And, that's still out there just because, we quit reporting upon it. It's not going to get fixed in 3 weeks. It just is still there. So now CNBC is reporting upon it. And hopefully this is going to be a topic that they take seriously because if the economy continues, well, right now, because this is going to lead into the Fed decision is where I'm going with this. Interest rate cuts, Brandon. This is where I'm leading to here. If the economy starts to slide, we saw GDP would dip down to 1.6 was, and that wasn't a good sign at all. But then the inflation number last week was actually pretty good. I mean, it's not where we want it. It's still above 3%, but it went down 0.1. So everybody was excited that it went down 0.1. And some people, the talking heads and all the Bloomberg and CNBC and Fox Business and all those channels were saying, it's kind of a mixed bag right now. So what do you do if you're the Fed? And then Jerome Powell made a statement. What do you think the Fed's going to do, Brandon?
No, you can't because inflation really didn't go down. The GDP just took a hit. And if inflation's not going down with it, then you got to I don't want to say a double-edged sword. I want to see a two-edged sword. You're getting stabbed from both ways.
You are. And I think this is going to put pressure that we're not going to get any Fed cuts this year. It's going to stay this way. I was hoping to turn bullish the last time we did a podcast, but now I'm over here being the perma bear. And who knew? Like a year ago, I was like bull, bull, bull. Now I'm just like, I don't know. I'm getting kind of worried. And it's because I let the data tell me what to think. And, right now the data keeps trending towards, not good news. I think we're going to flip into deflation because either the Fed's going to raise it some more or we're just going to stay higher for longer.
Well, he did say to not expect rate increases, I think, at this point.
Yeah, at this point. But I mean, I don't see inflation dipping below 3, and they say they want a 2% number.
Yeah. This is going to be tough to get to.
It is going to be tough.
Didn't they have the goal of 2024 in the very beginning? When they first started raising rates, I think the goal was 2024.
Yeah.
We're not there.
Yeah, it was somewhere. You can't hit it. I mean, they didn't. Unfortunately, I hate to say, but they didn't go hard enough. Which is hard to say because they went pretty hard, pretty fast, but they didn't start early enough.
Yeah, they didn't start early enough, and it was because, in my opinion, I think I hate to make an accusation. I don't know the guy personally, obviously. I don't even talk to people that know him. But Jerome Powell was up for re-election. I don't want to say election, but renomination coming up that November. And I said on this podcast, I said, hey, he's going to wait to raise interest rates until after he's renominated. Wait, because it's not politically, it's not politically acceptable to raise interest rates on a president. Presidents don't like that because it hurts the economy in the short term. It doesn't really hurt the economy overall, but in the short term, and they like the short term because they don't care what happens after they get, pushed out of office. Which
is sad.
They want to win that second term, and then after that, after they win that second term, then they don't care. But anyways, he waited until after he was renominated to raise the interest rates, and it didn't surprise me, but.
So, I mean, here we are, and it makes me concerned. It makes a lot of people concerned. Warren Buffett has been selling more shares than he's been buying over the last, what did they say, 4-6 months? Yep. Berkshire Hathaway has been selling more. I mean, what is that? That's a sign? Does he think the economy is going to go down? He's only holding the ones that he's always held. So he's selling out of things and taking profits and I'm going to wait for everything to get a lot cheaper here soon.
Well, it wasn't correct. He didn't sell out of Apple. He sold a small percentage of a stake in Apple. But
my point was he sold more shares the past 4 to 6 months than he's bought. So that means they're selling. They're selling right now.
And he's the biggest perma bull in the world.
Exactly. So that makes me question some things too. I don't know. I look at all these things and I try to make judgments of where I want to put my long-term money, right? If it's really long-term, it doesn't matter because I believe in the company. I believe it's going to give me an investment in 5-10 years, no matter what.
Give it
But
to
if for me, I like day trading every now and then. I like swing trading. So for me, long term could even be just 6 and 9 months. What's 9 months from now? The economy could be in the tank.
Yeah.
So
Give me all your money, Dave. All of it.
so
I'll take it.
I was concerned, and I'm looking at these headlines, and it makes me worry. There are some good spots that the companies are doing cost cutting measures. They're trying to save money. They're trying to get ahead of it. We continue to have layoffs in a lot of companies, but I read an article recently that said that the layoffs this year weren't as bad as what everybody thought they were going to be. And they gave the numbers, and I was surprised.
Tell that to the people that got laid off.
True,
That's
right?
tough. That's always the tough part. But, I agree. I actually thought it was going to be worse. I thought it would be in a recession right now and that it would be inarguable.
Right.
So, yeah, that's true. But, what the fact of the matter is, I still think the recession is coming. And I told you a million times, timing it is almost impossible.
Yeah, it's Brandon with winter is coming. Recession is coming. But yeah, so I mean, those are things I keep an eye on. I try to watch. I will share this with our listeners right now. I did sell a portion of my Novo Nordisk stake, which I said I wouldn't, but I found some good investments, and I'll give everybody listening one of the good investments. But I'm going to save my secret one until I'm fully invested in it, because it's a moneymaker for myself. So one of them I found was an
hold on. You want everybody to make money, Dave.
I do. So I'm going to give you one of them, and then if you're a close friend of mine, you'll get the other. The one that's consistently has been making money for me is QQQY. This is an ETF. They're invested in treasury notes and options. They're currently paying every month that they've been paying an average of a 5% dividend.
So what kind
every
of
single
options,
month.
though? Are they options on the treasury notes, or are they options in stocks, or what?
So it's both. And if you look in the prospectus, because I looked in the prospectus when someone brought this to my attention, I said, well, how are they making 5% a month to pay out? It's got to be a way. So they're doing options, and they're doing option spreads. So they're making money either way. And that if you do it with enough money, then you can create enough money to pay out to everybody who's a shareholder. And currently it's been averaging. Remember, it changes each month, but it's been averaging 5% dividend.
Okay, so the options. Say the options thing again. What are the options on? One more time.
So go to the prospectus, because I don't want to quote it incorrectly. If you, I love Fidelity for research, right? If you go to Fidelity, and that's the one I use, QQQY, pull it up. You could click on the prospectus. You could read what they're invested in. They're invested in U.S. Treasury notes and option trading.
Wait a minute. You said that they've been averaging a 5% a month return?
A 5% a month dividend payment.
Dividend. Okay, gotcha. Because I was looking at it, and they IPO'd
Not return.
14th, 2023 at $20.14, and the stock's now at $15. So
yeah, but if you look at the average dividend payment and work out the average over the course of its life, it's averaged a 5% return just from the dividend payment.
Okay.
Every single month.
Let me ask you this question. This is something that I should probably know, being in the position that I'm in and a host on this show, but it's an ETF, okay? If these options go belly up and the dividend breaks the ETF, what happens if an ETF goes belly up? Is it the same thing as a stock, where the preferred shareholders and the bondholders get paid first, and then the average everyday shareholder gets left holding the bag? I don't... Because you don't have any bonds on an ETF, so you would think that the shareholders would get their money back first.
So you're right. I mean, ETF is different than a stock ownership of a company, right? So there's the company that runs the ETF. An ETF is just what it is. It's an exchange traded fund. So it's just a fund that we're able to buy and sell shares over the exchanges on.
Yeah.
And then you look in the prospectus and you can see what the fund has allocated, where the fund puts its money and how it makes money. So this fund is more of like an income fund, for a lot of people because 5% a month is a nice return on your money,
It
very
is.
nice return. So if the fund all of a sudden 1 month is just insolvent, so the options are all bad and they got to pay out the options, they got to pay out the options first. They got to
Yeah.
close them out.
Okay. Okay.
So after they close them out, whatever's left is what the fund has in it, and if that means the share price drops to like $1 a share, that's a risk you take. It's very risky because they invest with options. You know, the
Yeah.
treasury notes is probably the safest part about the ETF itself. It's the option trading is very risky. So it's not a for someone who's very conservative and low risk. This is for someone who is looking for. You have to watch it every month. I would keep a close eye on the ETF.
Okay.
But this is something I pulled some money out of my Nova Nordis fund and I put it partially into this and partially into another one.
Nice.
So.
Nice. I've been doing this for 10 years, learning something new all the time. Thanks, Dave. Thanks, Dave. I didn't know what happened if an ETF went belly up. I had no clue.
Right? Yeah. I mean, and so it's if this one is different because they invest in options and not stocks, so that means that they got to close out those options first,
Gotcha.
and then whatever money's left is whatever that fund has left.
Okay.
If it has nothing left, and the share price just goes down to like 1 cent.
Yep, 0, and it's gone.
Right? Everybody sells the shares because it can't pay a dividend 1 month, and that's the whole reason why people own it. And it's like, okay, boom, that share price will drop like a rock if they can't pay a dividend one month.
Okay. Give
Cool.
me all your money, Dave. I'll pay somebody to close this closet door that's been open for 3 months.
I'm good, man. I'm good. I'm good. I'm trying to move on with myself to bigger and better things here shortly in the next few years. So very happy. Very happy. You joked about us putting like those cars and everything on there. But I am working towards in a few years. I have a Wheels Up membership. I don't know if you know what Wheels Up is. They do private charter plane flights.
Okay.
And I'm hoping to stop doing commercial domestic here in a few years because I just can't stand the airports and the flying back and forth with other people on the plane with me. It's like, ugh.
Okay. You got to be careful though, because a lot of those private charter jets have been like in service for like 30 years. This is why
Wheels Up's a fairly new-ish company.
Okay.
New-ish. They have a partnership with a lot of sports teams and ESPN and so on and so forth. So they actually are a very reputable company if you look them up and check out their safety standards.
Okay.
I like them.
Cool.
Right? But yeah, so QQQY, that's the one I'm looking at. Other than that, this week, I don't know of any big news coming up that would make me want to invest in anything just for the week or have any trades. I'm definitely not buying GameStop. But like I said, all those people, all those firms or people who did the shorted the stock, they eventually have to buy it, and that's going to create a dead cat bounce whenever they have to buy back in. So, be on the lookout for that, and because everybody will jump on that saying, "Hey, here's some time to get back in again," and it's just people closing out their shorts.
Yep.
Brandon, final thoughts.
Get your watch list ready. I thought the correction was coming. Looks like we bounced back up because the S&P 500 and the NASDAQ hit all-time highs again. And what incredible volatility that was, because we were nearing correction territory just like a week and a half ago. And now we're right back up again. But get that watch list ready and buy when those stocks that you've wanted to own for a very long time, but they've been too expensive for your blood, they come down and the skies start to rain a little bit of gold. Buy those companies, buy the good ones. Just get them ready.
Buy the good ones. I like that.
Tell you what, Costco. I'm looking at Costco. Please give me a deal on Costco because I've wanted that for a very long time.
Right, Costco, Google's at all-time highs again. Amazon just keeps going up there, beating numbers. Those stocks, it just seems like they can't be beat. Apple's back. Can they get up to their highs? They're back.
Yeah. This was the one quarter. This was the one quarter where they actually did have declining iPhone sales and a ecosystem that is starting to minimize in China, and somehow their stock's back at all-time highs. I don't understand that. I'm not telling people that own it to sell it because that's always been a mistake, but I don't get why it's as high as it is right now. I don't understand.
Exactly. I don't get it either. But other than that, I don't have anything. My only, and I will say it one more time, ticker symbol QQQY. Check it out. Do your research. Read the prospectus. They pay a monthly dividend as of right now that averages about 5%. So
Yeah, the Apple thing's got to be the $septillion buyback program that they announced, or however much, the largest buyback in history. Maybe that's what's pushing it up.
that's 100% what pushing up. But for me, I've always said, look, I'd rather use that money to grow the company than to do a stock buyback.
Yeah.
But I mean, if that's the only thing you could do, then go ahead, do it.
Yep.
All right. Well, we thank you guys for listening. If you like it, please hit the subscribe button. Recommend us to your friends and family. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money.
But Dave, you want everybody to make money, but you're not going to give them your extra special secret stock.
Maybe next week, to be continued.
All right. Have a good night.